everyone, this is Mish, Chief Strategist from marketgauge.com, coming to you at the end of the day, April 2nd in the U.S. And also, as you can see on your screen, I'm using the CMC charting platform, which means I was able to put in moving averages, but not our indicators that I've shown you with real motion. And that is something I can talk about in terms of momentum. But in the meanwhile, for active price gauges, from what I've understood from feedback, is that you like to trade cash, and the trading view I was using was giving me a spot future, but not a cash. So I would love some feedback on whether or not you like this better. In the meanwhile, let's start with gold. Here we go, parabolic. I have been saying for quite some time now that gold was going to go nuts after it cleared 2100, and certainly now that it's close to $180 higher, that seems to be the case. Now, the essence of commodities is that when they correct, very often it's not a correction. Once it's in a parabolic stage, it's actually the end of the move. So it requires a little bit of art and a little bit of science. But anyway, looking here at this gold chart, so there you go, 2200 now is the big key area, and over the last couple of days, we easily took out this high at 2236. So we're going to call that our immediate support level. And if we take a look at the body of this candle here, we can even say 2036 to 2042 is your support. We hold that, bias remains positive. We break that, maybe we need to have another test down closer to that 2200, maybe even a little lower, around 2180. Where are we going to go from here? Of course, that's anybody's guess. We are on new high territory. Again, just think cocoa. If anybody would have guessed that it would have traded over 10,000, people would have said, you're nuts. So we don't know. Could this go to 2,400? Absolutely. Could it go to 2,800? Absolutely. Could it go to 3,000? Well, yes, absolutely. Now, I happen to be on Charles Payne's show in America, Fox Business, and I mentioned coffee futures. And right now, this is what you're looking at is one sort of coffee. If you take a look here at this coffee, the Robusta, it's already off the charts. So that tells me that we're starting to see some kind of issues with the coffee crops. If we go to the highest closing price that we had right here, that highest closing price was at 203.60. It's trading right now or closed at 199.68. So that's another $4 from here. If it goes up another $4 from here, particularly on a closing basis, then that has to tell you that we're in for some big move. How big of a move? Well, essentially, maybe we're seeing something like 220 before we take a break. But what's more important is after cocoa and after I just showed you gold, here's another commodity that looks like it could be ready to go parabolic. Now, we haven't seen a correction in a really long time in any of the indices of any great consequence. And so if you're looking at this right now with me, this is Nasdaq. And you can see that we did have a correction today, but it still wasn't all that bad. We're still holding up over this 18,000 level. But you can see all the resistance that has happened here between 18,000 really and that and 18,400. So that's a big wide spread, but essentially what this is showing is that we never actually got some kind of a topping candle, in that this was a new high, but it wasn't a legitimate reversal because it closed within the range of the day before. So basically, this is just a gentle correction at this point. And Nasdaq closed down today, probably not quite as good as the SPY. That was down only 0.6%. This was down 0.8%. But we're getting into earnings season soon. Obviously, yields have gone up, and that's been a factor. The dollar came off its highs, but still has been stronger. And again, just basic fear of higher for longer, the economy doing better than anyone thought. Will that mean that the rates go higher still? And of course, a market that's been counting on rate cuts. That's what you're seeing here today, is some kind of at least selling. And we know that institutions have been selling into this rally, and in fact, some of them actually short. So the bottom line is this. At this point right now, I would say if you look at this straight line, that's 18,137. That's the closing basis on this, but you can also see it's a nice pivotal area in between all this work. We could probably say 18,140. Above 18,140, I think you have to be bullish. Below 18,140, I wouldn't say bearish. I would just say a little bit more negative, maybe a little bit more correction. Under 18,000, then your next real area to be looking would be 17,850. Now, another amazing move, again, no surprise to those of you who have been watching me week after week, has happened in crude oil. This is West Texas cash once again. I didn't put the moving averages in, but I don't think that's the most important thing right now. But essentially what we see here is that $80 I had mentioned, just 85 though was probably the more pivotal area, because if you take a look back here, we could probably go just a little bit higher up here, but over 85 we're starting to look a lot more interesting. And just looking at this work throughout all this period of time right here, what this is telling me right now is that through 86, 85, really up to 87 is your next level. We get above that, this thing is flying. And we can always talk another time about what are the implications, not just for the oil market, but for some of the other markets as well, if oil continues to go up. Now, 85, I'm going to consider that pivotal, although we can fine point that just a little bit on this wick here to this body of this candle at 84.18. So let's say anything above 84.18, we have to stay more positive. Below, then possibly it means that the move at least has a correction, if not over. I'm not as bullish in oil as I am in the metals right now, because oil has done its job. However, above 85, and then of course above today's high at 85.71, as I mentioned to you before, I think you'd have to look at 86, 80, and then 87, and then from there, who knows? I am very closely watching natural gas at this point, because I believe that this could be the last of the beat up commodities. We've already seen it in silver, copper, aluminum, and so forth, to get some kind of a run up. And it all starts with this reversal pattern that we saw here. But I've been mentioning to you that this 50-day moving average is extremely important. And right now, of course, since it's a declining slope, it comes in at 190. But really, I would have to say that I would feel better seeing a closing basis on this one if we can get back over $2, which is right here, basically. So if we're going to get back over $2, we're going to be taking out all this work that we've had for quite some time. And then I believe that we could probably see at least a move to 240 up to 250, if not higher. Of course, the implications of what that means if natural gas starts to go up in terms of inflation, we can deal with that another time. Where would I change my mind at this point? I would probably say, look at the doji day we had against all of these highs right here. So even if you wanted to look at it and nibble cheaper, 176, 177, if we round up a little bit, above starts to look much more interesting, and below I'd probably just stay away. That we needed to clear like 26.30. This was not looking at cash, that was a futures market. But if we pull back a little bit, you can see that we just got up to the highs, similar to what we saw in the other silver futures market, where it's basically matched at 26.15, 26.16. So that kind of makes it kind of clean. Now this whole formation is extremely powerful. We break out of this, I don't see any reason why we wouldn't go at least first up to 30, maybe even $35 an ounce. Some people are saying 40 or 50. Again, this is all an inflation narrative that nobody has been talking about. Clearly means that we're going into maybe some kind of a debt crisis. And we'll take a look at the currency actually in a moment. But right now, what you can see here is we get through this 26.16. Not really sure where this thing can stop immediately on a more intraday basis. We'd have to go back just a little bit further. Look at where this is. This is a huge, it's almost like a trend line. Then I would say your next area would be up at 26.80, 26.90. That's where I'd be looking for immediately. And of course, we get through there, we keep going. Where would I change my mind on this? I think at this point right now, if we wound up really breaking down under 25.60, 25.50, then I would say maybe this just ran into resistance and isn't going any further. By the way, we finally had a golden cross here that you can see where the 50 crosses above the 200. Of course, the price is pretty far, but the silver is back indeed in a bullish phase. Show you, since we've been tracking the USD to JPY, and once again, since I talked to you last week, it really hasn't done all that much. We got obviously through that 150 level, that was the key. But we're kind of holding steady here between 151.40 and 151.60, which of course goes back to this high right here. So basically what we have to say right now is if we can get through, and let's see where the high is right here. Well, this one is even higher at 151.95. But if we can get and hold above 151.60, it's possible the dollar goes a little bit higher from there. And of course, we have to look back in time. It's been a minute since we've been here, but you can see how much work there is at that 151.60. So that is your pivotal area. Above, bullish dollar; below, maybe the yen finally catches a little bit of a break. We have been watching the Swiss franc, which just made a new low again today against the dollar, but yet also waiting for that some kind of reversal pattern, which I would be sure to show you when it happens. Okay, that's it for now. Thanks so much for watching. Hope you have a great day.